Hello and welcome to this Cornerstone Finance Group podcast brought to you by Business News Wales and in collaboration with Zurich. I'm Gemma Casey, editor of Business News Wales, and in this episode we're going to be looking at business insurance needs. Well, business owners face a range of risks from loss of key personnel to changes in ownership. Having the right cover can protect not just the business itself, but can also provide family and financial security. So what are the key elements of the business protection market, and what role do mortgage advisors play in supporting their business-owning clients in this space? With me to discuss this are Paul Morgan, Head of Protection at Cornerstone Finance, and Jude Reynolds, Protection Specialist at Zurich. Hi both, and thank you for joining me.
Morning.
Morning, Gemma.
Paul, what do we mean by business protection insurance, and how is it different from personal protection cover?
To simplify it with regards to business cover, it's the people within the business that we're actually looking to insure, and it's very much the same way as mortgage advisors and financial advisors will protect their individual clients. It's still the people within the business that we're actually looking to cover for life insurance or illness purposes to protect the business. So it's the individuals within the business to protect the business from loss or financial difficulty in the same way as you would do with a household. And obviously with the businesses, you can extend that out a little bit further. The amount of people that are employed by businesses to keep that business running obviously has an impact on wider families and the wider marketplace if that business goes to the wall through financial loss. So it's the people within the business, and to protect the business is the key difference to what people would be looking at from a mortgage protection point of view.
And you've touched on there one of the key risks facing any business owner. But Paul, what are some of the other risks that an advisor needs to be aware of if they've got someone in front of them that is an owner of a business or a director in a business?
So from a wide point of view, it's the people, the men and the women, and not the machines within the business that are the important part. Okay, so the mindset will be a lot of the time that the buildings will be insured, the computers within the building, the machinery, but they don't think about the individuals. And a lot of statistics can be used within the industry, but essentially it's the death of an individual that's key within that business. Okay. Lose or loss of contracts through to someone being long-term ill, loss of relationship because of that person passing away, no one's picking up the reins on their behalf. And owners of businesses suffering from serious illness that can put them out of action for a considerable amount of time. And if there isn't a plan to people to step up behind those individuals and support the business, but B, for financial support, then that's going to be a huge impact on profitability and ongoing reputation for the business.
Thank you, Paul. And Jude?
Just to add a little bit into that, I think it's protecting your business as advisors as well. Because if you're looking after someone's personal needs, but you're ignoring their business needs, someone else could sneak in by the back door, do the succession planning. So you want to make sure you're de-risking that business and having that full holistic view of all the client's needs. Because there's we don't want someone else coming in doing that, and they might steal your personal parts of the client's business as well. So it's really important that you're sort of having an overview of all their needs when you're looking at their protection needs.
Absolutely.
So really, Jude, it comes down to knowing your client really well and knowing, what their situation, circumstances, and not just writing a mortgage for them, for example.
That's right. And you'll have some really key clues when you're talking to your client. Their occupation, if they're a self-employed, if they're a director, you've immediately got that next question to start opening the conversation. And that's what the key to business protection is: starting really good conversations and making them think about the risks to their business. And being a business owner, risk is something they're more aware of anyway. So it can be a really easy way to get those discussions going.
So Jude, if a mortgage advisor has someone in front of them and they've identified they're a director of a business, they're immediately now thinking through what the risks are. Talk us through them. What are the core types of business protection cover that advisor ought to be thinking about speaking to their client about?
So it's always called business protection, but it's actually 3 areas. You've got relevant life plans, which are a way of giving a death in service plan to an individual employee. And that can be from the directors all the way down. Really, there's only one person that can't have it, and that is a sole trader who isn't limited. They can't have it on themselves, but they can have it on their employees or their spouse if they employ them. So that's really it is really a personal plan paid for by the business, and that, although it gets lumped in with business protection. So that's the first area. The second area is key person protection. Now that's protecting the actual business. If someone's not around, it will cover loss of profits and remuneration, and it will also extend to covering liabilities as well. The third area is shareholder protection, and that is to make sure the money is there. If a shareholder dies or suffers a critical illness, the money is there for the other shareholders to buy the shares and the business can continue. I'm sure most of us don't want the beneficiaries of our business partner in the business and running it. They won't have the knowledge and the skills. So that's the 3 areas. And the really good news is if you understand personal protection plans, you understand business protection plans. There's very little differences in them.
That is a great message, Jude. Paul, so with that in mind, then, what is the market opportunity for advisors? Do we typically see that advisors are really good at doing this? Is there an opportunity for them to do more of it? And what's the sort of scale of the opportunity here? We know, for example, in Wales, there's something like 96% of businesses are SMEs. So an awful lot of those business owners are going to be sat in front of your mortgage advisors at some point, aren't they? What's the market opportunity here?
Market opportunity is huge. It's remained huge for a long time. I think across the UK, stats for 2024, 99% plus of the business population are small businesses. And out of the employment within that, it's around about 60% of all people are employed within small, medium enterprises. So the opportunity is huge. The conversation of protection, be it personal or business, can be something that it's quite easily moved past. Okay. And the mindset of getting an advisor to start thinking about engaging, not just on the personal, but as Jude said earlier, if you've got a company director, a couple of simple questions off the back of finding that information out. It doesn't have to necessarily be brought into the immediate conversation, but to have the engagement around it very early and to know that you will be talking about that once the immediate concerns regarding the client being in front of you for the mortgage and the personal protection, that you are going to engage them around this because it is equally as important. Okay. From an advisor's point of view, obviously there's a huge amount to go at, but research suggests that 97% of business owners would look for support from a financial advisor when actually engaging around this subject. And about 73% had taken advice from an advisor on the subject of business protection. So the message is very, very, very clear. There's a big opportunity, and business owners are crying out for support around it because they're not going to necessarily know what is needed and why it's needed. They are caught up in their day-to-day workings, and they need someone to engage them in the conversation, maybe even more so than personal protection, because they'll have that understanding from a personal point of view. But from a business owner's point of view, it's imperative that advisors start to engage on the conversation. And it doesn't have to be a huge amount of information up front. It's just ensuring that you know and you get the client on board, that you are sort of letting them see the risks initially, and then resetting a meeting for the business side of the requirements. It's not overly complex. As Jude has said, the products themselves are broadly very similar, but it's the organization, and a lot of advisors shy away from the protection conversation, let alone the business protection conversation. And the message it really is that it's not overly complex. There's a lot of support that's out there from insurers, specialists in the field as well, who've used to work at insurers and now running training courses. there's a lot of opportunity, there's a lot of support, and it's really that there's a lot of need as well.
And I would emphasize that. Don't get scared by it, and start small. Start building it into your new clients and your reviews. Look, don't overwhelm yourself with massively complex cases. As Paul has rightly said, of the 5.5 million small businesses, 5.45 of those have got between 0 and 49 employees. And start with those, and the opportunity is huge. We all know the banks used to have big rafts of IFAs. That's not the case anymore. They would make sure people's business loans and business overdrafts and business debts were covered. That no longer happens. They would also discuss key person shareholder. Again, that happens. So the opportunity is huge, and it can all really help to grow your own protection business at the same time as protecting and ring fencing your clients. So great opportunities for you there.
And on the subject of that, it's when the business is written, it's strong business. It's something that stays on the books, providing you continue to engage with the clients. But it is strong business from an advisor's point of view. It's very little risk of that business sort of falling off the books as it might do with personal covers. So yeah, there's a huge opportunity in the market, but don't be afraid of it. Like, as Jude has said, maybe start out. I wouldn't necessarily dive in both feet into a multiple shareholder arrangements without seeking support. But simple loan cover protection or key person protection, it's a 5-minute conversation sometimes with a BDM to understand how to take that forward and the key areas that you need to consider. And start off looking at that as a priority within your existing client bank, because I guarantee you they will be there.
And I would totally agree with that. And don't overwhelm yourself. Start building a bit of content on your websites, in your newsletters. Make people aware that you work in this space, and just gradually start to bring it into all your conversations. And there is a vast amount of help out there for you. All the providers like ourselves at Zurich, we are there to help you. There's literature, but there's conversations, there's technical teams. We can make life easy for you and help you to easily make that move from only ever writing personal to making you be able to write the business, because there's no extra exams, no, just a little bit of understanding. So you're already halfway there, I would say.
And Paul, to pick up on that note that Jude has made there about the amount of support on offer for advisors, that is something I know the Cornerstone Network really prides itself on. Talk us through the support that you offer to your advisors around this.
So I've had plenty of time within the industry. When I say plenty of time, I dread that it's 25 years now. So there's a lot of support that I can offer in terms of initial conversations with advisors and guidance on the subject. But over and above that, there's a huge network of business protection specialists, insurance BDMs that we will actually be able to tap into and organize. So we have in the past looked to put business protection training on for advisors. Any new advisors coming on board are more than welcome to engage with conversations with myself and the management team here. And then if there is a wider need or more specialist deep dive into a particular insurer, we will organize it for you. Okay. It's the key message is to start engaging. The support will be there. The support has been there for a long, long time and will continue to be there for a long, long time. The tough nut to crack is more about advisors wanting to have this conversation. And those who do tend to be very successful at it. Because the opportunity is huge and there's still a huge amount to go at.
And why do you think that is? Why is that the tough nut to crack? Is that simply because advisors feel that it's an overwhelming amount of information for themselves?
Yes, is the simple answer. It's a fear of engaging around a subject that they haven't necessarily been involved with before. So you take your personal protection, which can be an issue for mortgage advisors to want to engage around. And then you amplify that by whatever magnitude you want from a business protection point of view in terms of fear factor. We need to demystify that it's not overly complex. There's a couple of key questions you'll get into very early in the conversation that can simplify the routes that you need to be heading down. And an advisor's job is to identify the risk and put a solution in place for the risk. Legalities, taxation, they don't fall on the advisor's desk. That's for their legal representatives and their accountants to talk through. So identifying the risk and putting a solution in place it's something they do on a personal point of view. And Jude and I've talked about this before, that's the key message is it's not as complex as may be interpreted.
And there's some really nice questions, really simple questions that you can just ask people. Do you have personal guarantees on any business borrowing? Have they got directors' loans? Who would take on the role of a key person if they're, and really make them think. All the providers will have business protection fact finds that have all those SWOT type questions of strengths, weaknesses, opportunities, and threats. And that can really get your conversations going. You only need a couple of little questions and you're away, and we'll have, all the information you need to help the businesses that you're talking to.
Off the back of that, there's the main objections at the cost again. Okay. And 86% of businesses, when surveyed, they overestimated the cost of business protection for themselves. And some were guessing of 4 times. It's the same objections from a protection point of view, seeing the need, understanding that the premiums aren't going to be through the roof, that it is going to be affordable and the risk is there.
You said something earlier, Paul, that came up on the previous episode where we were looking at personal protection insurance, and that was about the importance of a mortgage advisor looking at this from a long-term point of view. So it isn't a one and done, it's a conversation you might start and it might come to fruition at a later date. But the importance is to keep that conversation and relationship going, which, as we know, is really key to a mortgage advisor building and sustaining their own business, isn't it? What would your message be to advisors around how to approach this as a really key part of the longevity of their own business as well?
No, absolutely. We start with the income side of things for it. Okay. It generally is a higher income for the advisors with regards to business protection. Okay. The business is stronger in that it does stick on the books, and the clients want to engage with advisors on the subject. Okay. Because they will deem it to be slightly more complex as well and requiring the advice. In terms of building value into your business and conducting reviews, it's hugely important to conduct reviews, whether it be personal or business lines. Families don't stay the same as they used to for 20 years. Okay. And businesses certainly won't be standing still. So the need to engage, as a minimum, we suggest 12 monthly with regards to protection reviews. And for businesses, especially with small businesses, there's a huge amount that can change within a short period of time. So maybe slightly more frequently than that. But engagement is key. Someone potentially will be looking to get into your client bank at some point by making contact. And it's strengthening your relationship and showing that it isn't a one and done, that you are there for ongoing support. When I speak to clients I've written business for and I get them the 12-month review, a lot of the time there's a lot of confusion as to why I'm calling. But ultimately, the call has been made, the reasons for the call have been made, and they know that I am there at the end of a telephone line if something changes. And when it does change, then you re-engage straight away. So good income, strong income, builds a lot of value into your business, that you're working with your clients on every aspect of their needs. And there's less risk from the point of view of A, cancellations, and B, someone else getting in the door and taking your clients away from you.
So huge positives for the client and the advisor around this. Now, your message from both of you has been really clear, and that is that this doesn't have to be overwhelming and complicated, which I think is really positive. So to end on then, I'd like to ask both of you the same question, and that is, if an advisor is listening to this today and maybe they don't speak to their clients about business protection insurance at the moment, or perhaps they just do that around the periphery, but they know now that this is an opportunity, what would be your one key step you'd like to see an advisor take off the back of this? Paul, I'll start with you.
The fact that they've wanted to engage around it is the first part. The second part would be to break down your client bank. There are ways of doing that with the CRM system and ACA. Breaking down the client bank, understanding who within your client bank you should focus on. and look to re-engage around the subject. You need to know what you're sitting on in terms of value, and there will be some real value already in your client banks. So obtain the data, break the data down, have a plan of attack as to how you address those conversations to start off with, and take it from there. But just give it a go.
Right, clear steps. Thank you, Paul. And Jude, the last word to you, your key step for advisors listening in.
Absolutely agree with what Paul has said. But as a really good starting point, have a look at your own business. Go through that, and that can really make you think, and just start asking the questions. As you're in a conversation with someone who said they're a director, or they're self-employed, or they work for, their own business, they've got their own company, or they've got a secondary business, just start asking the questions, and just start taking a bit of time to look at some of the literature on all the providers' websites. Maybe join a couple of the webinars that are just really good, half hour, get you started on each of the 3 areas. But don't be afraid of it. If you can write personal protection, you 100% can write business protection. And as Paul has said, the remuneration can be fantastic for you. Premiums tend to be higher. It does stay on the books, and you can regularly review it, and you will always get more. If you increase what they've got or change it, you'll still get commission on that. So vast opportunities, just go for it and don't be scared. You grow to love it. I do.
That's a lovely note to leave it on, Jude, and also don't be scared being the key point, I think. So thank you so much to my guests, Paul Morgan and Jude Reynolds, and thank you for listening to this Cornerstone Finance Group podcast.